Hi, this is Sunday 26, and this is the SPX Outlook for the coming week, overlapping last few days of January going on to February. We've had a more interesting week. After, 2 months of slowly grinding up some hesitation and reaching 33.40, there was this resistance in the 33.45 to 33.60, and it looks like it is probably a stall level. And maybe to our surprise, the market has shown some weakness, or at least on the bullish side, and we had, I think, on the 21st, the first fairly weak short signal confirmed on the 23rd. And we've had, it was not exactly heavy selling. The market, SPX, only got to the first salient fib level around 32.88, also the channel lows, so we will see whether the sellers have more appetite and more willingness to take the market further down. It is possible, of course, but it would only be some further profit taking. Maybe it dipped to 32.75, which is incidentally also the resilience level on the second fib pattern dating from early December. And we have from the run all the way from October, the first important levels, resilience is on 32.25. So I think the support levels here would most probably cushion, even though there could be a short-term acceleration on this channel breakout. But as I said, I don't really see it coming. The longer-term scenario is still bullish. As you see, the major support resistance levels have shifted up, with now a pivot level all the way to 34.37, and the first important levels are actually on 32.77 actually. So the market can really move within a fairly large range with the same ongoing bullish bias. If we look at a short-term scenario where this short-term scenario confirms a stall level, because 33.40 was the stall level on this support resistance lines, and it seems to be bumping now on the pivot level, which would mean that it would still remain, unless broken, it would actually keep moving sideways, maybe back to some bullish momentum, but probably sideways for a day or two in this range, 32.80 to 33.60, and more probably in a narrow range all the way to 33.21, 33.40. So I anticipate some congestion, and of course, unless there's some acceleration on this channel breaking, it will be going sideways for a couple of days. Now let's have a look at the longer trend. The longer trend is still showing that bullish re-entry from the 13th of Jan, and does it look here that like the market will dip further down? It's possible, but it's really still very much bullish on this chart. So I could move this arrow to probably 32.59, 32.60 as a likely support if the market dips a bit further. If you wish to better understand these support resistance lines on which I base a lot of my market reading, you can Google up Merry Math Lines. It is a very comprehensive topic, but we can discuss on Slack for members of the class. We can discuss the subset of information I actually derive from this line. The rest is purely Fibonacci and just basically graphical patterns like this channel. You may also surmise from my market reading that I don't really look at moving averages. Moving average crossovers, we would probably go for a narrow like 1344 or 2134 or 2150 using maybe esoteric Fibonacci numbers, but I would probably go for a faster than the usual 50 to 100 or 20, 50, 100 used by most chartists. I don't really like those moving averages, especially not the standard ones, because they lag far too much. They good if you're a trend follower and you just build your positions on a trend based on several time frames, but at the same time they will hardly ever give you a good signal. I do believe my proprietary indicator here gives me generally better signals, of course within the realm of graphical patterns. That's why sometimes, for example here, this short signals is dampened because this is an overall bullish environment, as you can see. Okay, that's it for now. I will record tomorrow the weekly recap for our positions. Have a good weekend and see you tomorrow. Bye.